We are live on Treasury Talks. We have Matt Cole with us, Chairman and CEO of Strive. And this is a spinoff show from our normal Bitcoin economy podcast. Our friend Brian Rothenberg, who I met at MSTR True North Meetup, is super passionate about the space, always active in multiple Treasury communities. And we wanted to bring him in because this is his idea of let's get the community involved from the bottom up, have the shareholders, have the people that are very passionate about not only Bitcoin, but Bitcoin Treasury companies to come in and ask questions, really be the voice. And we really appreciate you, Matt, for coming on and jockeying with us and answering these questions. So welcome.
This is an important format, so glad to be here, guys.
Awesome. Let's kick it off. Avi, you can kind of jump in and start with what do you want to ask Matt?
Avi, I can't hear you.
Oh, here we go. Checking 1, 2. Good?
Good.
It's Friday, guys. Matt, thanks again for popping on. I know we had met several times now, but mostly in Asia and Hong Kong. And as we were talking about before we hopped on here, things are moving so fast when you blink, there's a lot more to talk about, obviously. And so I actually pulled up a quote from you from May where you were talking about beyond just holding Bitcoin for these Bitcoin treasuries, right? You said, by contrast, alpha generating Bitcoin accumulation strategies are designed to drive sustained outperformance relative to Bitcoin itself, which requires a new valuation framework. And then you go on and talk about how companies could go on and make acquisitions. And now for those joining us real time who've not seen the news, the acquisition of Semler Scientific being massive. So a lot to unpack there. I know you've been on a few other podcasts, so we're going to try to avoid questions that have been asked before. But to that point, can you just talk like very high level and what you just mentioned to prior to my question about this like digital transformation of not being able to go talk to Tim Cook from Apple, and the shareholders never get this opportunity. So super cool what you guys are doing as Bitcoin treasury companies. You've been amazing by hopping on these podcasts. So yeah, I know I just mentioned a lot. So let's start with like the overall concept of operational Bitcoin companies and this acquisition of Semler.
Yeah. So on the digital transformation of communications point, I think this is where the future will be for S&P 500 companies in the future. That it won't be acceptable, in my view, for an investor to have a CEO, a leadership team that just sits behind and communicates once a quarter or once a year. Tell people, I think people are going to want real-time communications. We are in a digital information era. Obviously, AI is picking up and is able to process information in real time. And I think it is completely reasonable and should be expected for those communications to improve. And so I think you're seeing that in Bitcoin treasury companies because these are Bitcoiners that are native to X, native to talking to our internet friends all the time. And now are in positions of leadership of publicly traded companies. But I think what you're going to see is that as that excels and it succeeds, that other companies are going to start to fast follow in improved communications, pointing to this as the model. So that's the point on communications for Bitcoin treasury companies, and where I think that goes from here. As far as the acquisition with Semler and unlocking alpha. Look, I mean, any M&A activity by definition needs to be a win-win, right? So to find M&A and to be good at M&A, you need to be really good at structuring the deal that's win-wins for both shareholders. Strive did that with its reverse merger with asset entities. And with Semler, there was a couple of different dynamics to that. And I think what's been really well covered is the Bitcoin side and why elevating the Bitcoin stack combined with the clean debt structure of Strive can really elevate into a leadership position on the preferred equity side, which I think is the future for Bitcoin treasury companies and like the most important thing and the thing that we can even lead what strategies ambitions are. But what I think's been underappreciated in this merger as a synergy and potentially could be at the end of the day the most important synergy is actually on the operating business of Semler. And re-envisioning that under a Strive umbrella, where our largest shareholder and the co-founder of Strive is Vivek Ramaswamy. And his background is in the biotech industry, and he is an expert investor in all things medical. And you think about Semler, their operating business is preventative healthcare. And their operating business has been historically profitable. It's been challenged recently, losing its largest shareholder with some issues with through the political process, and I would say mainly under the previous administration. And you could think about this and say, okay, well, the current administration is really passionate about preventative healthcare through the MAHA movement. We obviously have insane connections there, and really helping them unlock their current state, but then potentially even more importantly, using Vivek and his network, and then even one of our board members, Ovik Roy, that comes from the medical space as well, to give it a broader mandate around preventative healthcare and to bring in a new top level management team. And that's not to say that the current management team won't still exist or be part of that in the product under Semler, or even part of the broader mandate, but to have call it MAHA Roivant 2.0 preventative healthcare business that has all these different products underneath it that are all surrounding preventative healthcare, and ultimately monetize that. So it could be a spinoff, it could be some form of monetization event for Strive, where either Strive is getting dividends from that, or just as an outright sell or dividend to shareholders. Because ultimately for us, our Bitcoin is our hurdle rate for all things capital spending, but we think that we can really quickly, and without even my involvement, I'm not an expert. I'm super passionate actually about preventative healthcare, but from an investment perspective, that's not my expertise. But when you have people like Vivek and Ovik at our company, you can really think about possibilities to create a lot of value. And I think that value obviously would accrue to shareholders on both sides, the Semler shareholders today, the Strive shareholders, and that ability to think about kind of a broader mandate and mission there, plus the Bitcoin side of things, I think where this is a grand slam for both shareholders.
Mm-hmm.
I guess to follow up on that, when you announced at Strategy World about the merger with asset entities, you'd mentioned that acquiring public companies trading below basically their net cash was one of the basically Bitcoin accumulation strategies that you guys were looking into, that was very prominent in the model. Are you still looking at it that way? Do you look at Bitcoin treasury companies as bigger opportunities today? Are there other plays that you're looking to make that are stronger in terms of that? I'm just curious, over the last 4 months, what you've learned in the process, and if anything has changed with that original thesis. I'm sure at the end of the day you'll be opportunistic where you need to be, but I'm just curious how that might have transformed a little bit in the last few months.
Yeah, so interestingly, we did turn down one biotech M&A opportunity during the pre-close period with asset entities, and the reason being that it would have delayed the close of the initial transaction, which we really wanted to get done as soon as possible. But what's the most important thing that's changed? So biotech M&A is still in scope. I would say it's not priority number 1 or 2 at the moment, and so given how fast we're moving, that means that it's probably unlikely to be a near-term focal point. Although I do think that additional potential M&A activity in the Bitcoin treasury space, I would say, is definitely in scope. It takes 2 to tango, but my view is that there should be substantial additional consolidation in the space. But it takes rational actors thinking clearly on both sides to make a deal that's a win-win happen. But what I think has become the most important thing that was just outside of imagination for us to have this differentiator when we were on stage at Strategy World would be that we would be literally an N of 1 company with no debt on the balance sheet, with a shelf registration, as kind of strategy has moved towards a perpetual preferred equity offering. Like back in May, that was part of the conversation, but the conversation a lot of times in the community that we were talking about on the hurdle rate and stuff like that was around the laddered maturity schedule of the converts. And we were looking at converts, and we turned them down at the time in May when we raised our pipe because the terms just were not good, and we were not comfortable with that maturity risk on our balance sheet. But that turned out to be a larger differentiator than we were expecting at the time. I mean, frankly, at the time, I almost viewed it as like, man, it's a negative. I can't believe I'm turning down convertible notes. Like, I love these convertible notes, but I can't feel comfortable for that for our shareholders. And what I thought at the time was going to be something that would be perceived negatively. It was a contrarian position. But one, we're not afraid to be contrarian. We're not going to be contrarian for contrarian's sake. I'm not afraid to be do the consensus thing or the contrarian thing. It's about being a free thinker. We made that decision, and then that became a huge differentiator for us. And so now, you look at Strategy's 2Q presentation and say there's desire to get to a pref-only structure, 30 to 50% leverage, and you look at like who can actually do that. And Strive has put itself out there, I think, as one of the only, at least in the United States, companies that can do it. I think Metaplanet's going to be able to do it in Japan, and Strive can do it. Strategy is going to take them a couple of years, and to me the funny, like, biggest risk for Strategy is actually not that they're going to blow up, but that it's hard to get the leverage that they want because of how much Bitcoin they own. And so, for people that want amplified Bitcoin exposure, if a company can get with a clean balance sheet to 30 to 50% leverage to prefs, that is a fastest horse that I think, is going to be an extremely attractive, positively convex, amplified Bitcoin equity story. And so that's become by far the most important thing for us, is to get to that scale and get to that point. And that's, currently the focal point, and it's more important than the biotech M&A. So it might be at the expense of it, or it might be a both, depending on, how much we can actually get a couple hours of sleep every now and then.
I guess to follow up on that, is you mentioned the shelf registration, and you are a well-known seasoned issuer, which puts you in a different position, I think, than some of the other companies. And I think that that's also something that's not talked about quite as much. And I think in some of your, your filings with the SEC, you talk about basically, what is it, a $450 billion ATM, facility? Sorry, billion. Sorry. Oh, million. Okay.
What's a few zeros amongst friends?
Just give it a few years, right? So we'll be talking about billions, in the 2030s. But how does that, I guess, set you apart from other company deals, I guess, without getting into specifics? But I remember you once saying that the deal structure you had with this reverse merger was intentional, I think, for that reason.
Yeah, look, I mean, the size of the shelf that you can file, it's literally, you can pick any number that you want. So you've seen, other people put 5 billion out there, whatever number. The reality is more of like, how are you going to manage it, right? And manage it in a way that actually accretes value to common equity shareholders. And as a well-known seasoned issuer, like other well-known seasoned issuers, like if you were ever to complete a program and you wanted a new program, I mean, that's a like process of a matter of like 48 hours or less. So like, I think for us, what we didn't want to do is communicate some size that it's like, we don't even see a volume profile where that's even something that's in like the realm of possibility. And it's more of just like what are we doing? Are we trying to is it a marketing exercise? It's not a marketing exercise for us. It was like something that said, okay, like, we have a lot of things in the hopper here. We have, our pipe that is, that just closed. We have $750 million of warrants that have, 1-year expiry. Now we have the Semler potential M&A transaction. We have, potential perpetual preferred equity offerings. And so like, if you just start to pencil in numbers for that, you quickly see potential for Strive's Bitcoin holdings to grow massively, like with almost no ATM issuances. So I didn't see a need for us to put in place some, multi-billion-dollar ATM strategy, and really just to think about it opportunistically. And I mean, obviously we haven't disclosed any ATM usage. I can't really talk about that right now, but just by and large, I mean, you look at the space and the Bitcoin Treasury ecosystem right now, I think, even with Strategy itself is in kind of a little bit of like a lull, I would say like a micro bear market where, Strategy yesterday just broke down to like all-time lows relative to Bitcoin for 2025. And so I put out a little post, and I'm going to put some charts up later this week, but I think there's a moment in the broader Treasury segment of fear, and like markets operate oftentimes in fear or greed. And as a long-term investor, like the time to consider buying or going at the risk spectrum is in times of fear, not in times of greed. But the emotions of people's, investments are to do the opposite, right? And so, look, I'm not going to ever comment on, the price, the short-term price of like our security. I can be more of a commentator on, Strategy or other companies that are not ourselves. But I think this is a time across the ecosystem to look for bargains and look to go out the risk spectrum, not the opposite. And that's not to call a bottom. periods like this, you cut off your hands trying to catch a bottom, but these are times where you want to consider building the risk positions that you want when the moments of greed return. And I think that's something that like long-term Bitcoiners, long-term investors understand, but people that are entering into these markets and to be clear, like Bitcoin treasury companies that we know are supposed to trade like amplified levered Bitcoin. So it's like volatility on top of volatility. And I think the way that these things work is when you smooth out time, right? You zoom out and they work. And I think that's where, I talk a lot about where people will try to dunk on strategy and say, oh, well, look at how bad strategies perform versus Bitcoin in 2025. And then my response is, well, Bitcoin itself is down, 26% versus gold in 2025. Let's actually zoom out to when strategy started this strategy, and they're up massively versus Bitcoin. And even if the MNAV for strategy went down to 1x, they would still have outperformed Bitcoin massively. And then people are like, well, it doesn't matter if I invest today. And it's like, look, if you're trying to time your investment on any 1 year or 6 month horizon, that is a recipe to get absolutely wrecked. And so it's just not a way that I'm ever going to frame my thinking.
So it seems like you've been reading the same tweet threads that I have been in, except that they're not. So other than mentioning gold, which I'm not into because I'm relatively new to Bitcoin itself, it's the exact same conversation I had with somebody yesterday where they just sort of don't want to look at those things. So very interesting there. Going back to one of the other things that you brought up a little bit earlier, but like the change in investor relations, the revolution in investor relations and those things. I know that Jeff Walton, who's on your team, has talked a little bit about the acquisition of True North over the last couple of weeks, but I'm curious to just hear you talk about that a little bit in terms of what benefits you see True North getting from Strive, what benefits you think Strive will, get from True North there. I think Jeff did a great job on the True North podcast on Wednesday night addressing a lot of those things, but curious from your perspective strategically what you think about that.
Well, first off, I need to pay Jeff the $1 acquisition.
You do, but it needs to be framed, so you got to work on that.
And it can't be an old, limp dollar. It needs to be a crisp dollar. So I need to get that
frameable.
Yes, frameable dollar. But the broader idea here is that when you think about digital, conversations, this isn't about investor relations for Strive. It's about actually propping up the industry, because I think education around the industry is so important. And so it's not about telling any of those individuals what to say. It's actually to say this group of people have had amazing conversations. They've had disagreements, and to actually help elevate that, because when we did the reverse merger with Asset Entities, they are literally a media platform. They were most on Instagram and TikTok and Discord. And these are super talented individuals to say, like, no, we actually have a little bit extra resource here. How can we maximally utilize that resource for the industry? And you'll notice, in this industry that although we're all fighting for Bitcoin, it's very collaborative across the space, right? And that collaboration is like real collaboration. It's like real friendships. And it's really helping get education out there about strategies, with not to just say, hey, True North, go out there and just only talk about the bullishness of strategies. And it's actually like to educate, like, how do you think about this stuff as an investor as it's going so quickly? That's where I thought we could be helpful with the True North brand in a way that, effectively costs Strive nothing. And then I guess if it were to grow from here, with other shows underneath the True North brand, what I really like is, although not everybody on there's a kid, like this kid analyst mindset of like, there is a lack of talent in the Bitcoin treasury space. And I would say the most competitive thing, like when I'm dealing with some of our competitors, is like, we're trying to hire the same people. And so it would actually benefit all people to, I know people laugh at the term podcaster, but actually to give people a forum, maybe through some additional challenges, additional shows to like prove themselves. And so it's not going to be me telling them at all what to say. It's like, look, like, you want a Bitcoin job, go out there, produce great content, show yourself to be an independent-minded thinker in a way that another company, whether it's Strive or any of the other Bitcoin treasury companies, might want, and help elevate the talent in this space. Because I think strategy really wants Strive to succeed, and the other Bitcoin treasury companies, because if we're blowing up, that doesn't help them, right? Like, so we all want each other to succeed. We want the talent level across the ecosystem to level up. And the best way to do that, in my view, is to give people a platform, a proving ground to, try to build an audience and get a track record out there of, intelligent thought that might lead to Bitcoin jobs. And that's what happened in True North. And I think that there's room for that to grow. And for almost, effectively like no cost under Strive, we could help grow that ecosystem in a way that True North was not going to be able to on its own.
Yeah, so if you are listening, go out there, make good Bitcoin content, good Bitcoin Treasury content and analysis, and we'll bring you on the show. So I think it's a great way for new people to get in the industry that are very passionate about it, that study and analyze these treasury companies. We're happy. This is the purpose of this show, is try to get more voices out there. So Matt, I have a question. I interviewed Eric Semler at Strategy World this year when you guys, made a big announcement, and he was talking about through Semler's journey. Even after when they started buying Bitcoin, they just encountered these tailwinds of, hey, Elizabeth Warren's going, working with the banks and part of this Operation Choke Point 2.0 of shutting off access for anything that's Bitcoin related or trading or cryptocurrency. And then he also mentioned that she had like a double-edged sword, which was also going after, Semler and some of the business that they were doing on the medical side. Without getting too deep into that side, do you feel like Vivek and his connections and his political influence will help unblock some of Semler's business? I'm not sure if you've talked about this in detail before, but I do feel like that would be one strategic advantage of having Vivek involved, would be not to encounter the Elizabeth Warrens or be able to overcome that to make a profitable business.
Yes, I think two things are true here. One, the current administration, without anybody, Vivek or anybody, already wants to move in a friendly direction, clearly with both Bitcoin, but also preventative health. So like you look at Semler and you say, this politically should be a home run. Like they're almost like the N of one company that should be the most positively benefited on all sides of their business from this change in administration. I think the hard part for them is it's like to get in the room, to have the right conversation from a place of mutual respect of who known people, and I think that's where Strive at large can be very helpful in helping elevate that conversation to the right place. And I think that it would be shocking to me to have the administration take a negative view on anything regarding what's going on with Semler, and so I think that is part of the value add we can have, and then also the broader mandate of the mission also I think is potentially even a larger value add that Strive can bring.
Great.
Sorry, I'm mute here.
Go
ahead. You got one. Go first. Go first.
I was going to switch gears a little bit. One of the other things you announced, Matt, when you were doing the reverse merger with asset entities was the 351 exchanges, basically being able to give Bitcoin and especially where you were giving it into the company, not have an unrealized gain in exchange for stock. So I'm curious to ask you how that process went, if there was anything that you learned about that, but also ask you kind of more broadly, there are other companies that do different things like Capital B and Smarter Web with Bitcoin convertible bonds, both of short duration and long duration. And I'm curious what your thoughts are on those products overall, not necessarily in the context of Strive.
Mm-hmm. Yeah, so on the 351, I think it's a really innovative way. So I think that to raise Bitcoin, the thing that any Bitcoin treasury company has to deal with is how do you go from 0 to 1, right? To elevate yourself to one of the major players in the space. And so that was, and anything we talk about, whether it's alpha strategies or anything like we're solving foundational problems, right? Increasing Bitcoin per share in a maximal way, elevating our Bitcoin stack to a place where we can operate efficiency, both with regards to the costs of running the strategy, but also with regards to accessing institutional capital markets. Like you look at, like as an example, Capital Group, who just became the largest shareholder of MetaPlanet. Well, they have various funds. Their largest fund requires a $6 billion market cap. That's the one that Mark Casey talks about, right? And so you have to elevate yourself. Otherwise, you can't unlock the institutional capital that wants to come in the door. So there's a scale component. There's also a Bitcoin per share component. And as you grow, the scale becomes less important and the Bitcoin per share becomes like the only thing. But if you start at 100 Bitcoin, like no institution can even buy you. So you forget thinking about a preferred equity instrument, forget thinking about, a lot of the different things that you might want to do because you just haven't achieved the scale and any sort of like actual talented team you just wouldn't be able to afford. So there's a scale element, right? So that's kind of like the building the plane, the engine as you go, right? To get to where you want to be a perpetual Bitcoin per share maximizing machine. So that's I would say with regards to kind of how we think about that. With regards to the convertible notes that are have the Bitcoin risk that some of the European international companies have done. My view is from a principal perspective, our goal is to maximize positive convexity. And so what I mean by that is that to the upside, that we can have a leverage profile that maximizes Bitcoin per share increase, period. And I think a lot of the innovative approaches that have been done in the space can, and I think convertible notes are part of this, do not do that as well as perpetual preferred equity instruments. And so I would say that on that. So like, but to say that like, it's not that it's bad. If you think about it as an example, traditional hedge funds or funds, there's literally thousands of different risk reward profiles that are going to be appealing to different investors that have different risk return objectives, right? And so there are investors that might prefer that, hey, in the downside scenario, the risk is quarantined, right? To that the fact that these are Bitcoin denominated instruments. And so that has a certain risk return profile. Like you look at other companies that might be selling covered calls. I'm not 100% against that, but I think it's something that's not desirable if you can avoid it, because when you sell covered calls, you ultimately are reducing the upside positive convexity. And I think when you look at Bitcoin's historical returns, like you don't want to dampen the return on the days that you just see it green and shoot up, right? Like you want 100% of that upside. And so you can monetize it, but like if you look at, as an example, ETFs that write covered calls, they generate great income, but it's at the expense of total return. Like they actually, like a covered call S&P 500 strategy will drag just a pure play S&P 500 strategy. And so what we're trying to do is be the fast engine, the one that is not giving up an iota of upside, but then also managing our risks to the downside in ways that don't dampen the convexity. I think is one of the best positively convex assets ever in Bitcoin.
Yeah. Last question too, and I was just looking up the quote to make sure I had it right. There's a stat: roughly half of the S&P's 500 total returns come from just 10 of the best days. So, to your point earlier, it's not about timing the market; it's time in the market, is the famous phrase. I want to phrase it in the correct way. I know you can't obviously talk about price, and you guys are certainly not alone, as you mentioned when we started the podcast. Right? A lot of the treasury companies' stocks have been under pressure. A lot of noise comes from that. You're putting yourself out here, coming on podcasts like ours. How do you work with the shorts, the critics that are hammering share price? And I'm sure you've talked with other CEOs of treasury companies as well. But how do you filter out some of that market chatter and stay focused on building a long-term company and value for shareholders?
Mm-hmm. Yeah, I think communications in these times, I mean, it's, if you talk to any PR person, they would tell you, when stock price is going down, just don't go out there, don't talk to the market, and then go out there and talk to the market when times are good. But I laid this out with regards to strategy, although I can't talk about the short-term price dynamics of our own company other than to say the obvious, which is that the technical picture of a pipe unlocking is complex. It doesn't have to go any way, but you've seen how it's gone with others. And just to say but then also sometimes it doesn't, to say, look, that's a complex situation. I think it's reasonable for people to say they wanna wait. But our fundamental picture is extremely strong, right? You look at the debt-free capital structure. You look at the fact that we just announced the definitive agreement 1 week later with Semler. This team is rocking and rolling. So a great fundamental picture with ambitions to get a preferred equity instrument out there. And then, with the broader backdrop of the Bitcoin treasury segment and kind of a mini bear market, that, as a long-term investor, that's a time where, generally speaking, you want to be allocating to risk, whether that risk is Bitcoin or MSTR going out the risk spectrum, which MSTR just broke to a yearly low versus Bitcoin. And so that's when you get all the haters dunking on strategy and saying, look at how bad it's performed this year. And you say, zoom out, look how well it's performed over years, right? For people that aren't used to the volatility of something that is literally designed to be amplified Bitcoin, that is, I think it's imperative for me as someone that is structurally bullish on both Bitcoin and Bitcoin Treasury companies to say, look, you need to zoom out. And if you zoom out, if you're thinking about basically like trying to sell your Bitcoin or sell your strategy right now, I think you've either over allocated or you're thinking in the wrong time framework, and that you're likely from an investment perspective over the long run with that kind of a mindset to get wrecked. And I don't want people to get wrecked. I want people to have, good long run returns. And having been a long time Bitcoiner and gone through numerous cycles, I think it's important to be out there when people's emotions are high amongst the space, and have, likely a lot of them have, had some of their net worth go down through this, to say, hey, like, you're not just going to see me walk away when, times aren't, great. Like, and you're also not going to see me like sitting here, like, with pumping my hands in the air when things are, super good. Like, we're thinking about this from the perspective of years, of decades, of building a perpetual, amplified Bitcoin machine. And you need someone level-headed throughout all those scenarios, right? And I think that's just extremely important. So that's kind of part of the reason that you'll never see me just go silent, regardless of, number go up or number go down with Bitcoin or strategy or our own, equity.
And so, Matt, we can't have Cole Macro come on and not ask you about the macro landscape. We don't need a price prediction for tomorrow, but what's your overall feeling? Price cuts, or rate cuts from last week, but prices are down this week. What are you thinking right now?
Yeah, so I think rates have room to go lower. I think that both AI, while it's going to be really good, I think for the economy, for corporate profits, for business, it's going to generate a weak job market, and I think it'll, over the long run, keep inflation contained. Although in the short run, these data centers aren't built yet, so there's all this demand for AI compute, and there's not enough supply. So maybe some short-term inflation pressures, but I think inflation pressures over the medium term are going to be lower than what I might have previously expected just from the debt crisis. So I think that will give some downward momentum for rates. I think it will be a good story for equities. I think it's going to be a great story and macro backdrop for Bitcoin. I think Bitcoin is going to be a major winner, and that could be in 2025. I think it's likely to be in 2026. But I don't think that we've even seen this bull market start yet. And I think that that's, even though it's kind of been a crabby 2025, it's crazy to say with Bitcoin above $100,000. But the reason I would say that is, and the most important chart to watch there is Bitcoin versus gold. That Bitcoin has not broken out to a new all-time high versus gold since 2021. But it's also within, earshot of that high. It's kind of underperformed recently. But if that breaks out, that's where I think you start to see true euphoria kick into the market as it moves into new all-time highs, and probably goes pretty quickly as that's happening. And I think that's also a scenario where, if you had to have a guess, like, when is the scenario where you start to see Bitcoin Treasury companies as a segment really rip? It's there, but even with that statement, now it would be the time where I think you'd want to position for that if you think that's actually going to happen, not as it's happening, and the companies are substantially more expensive.
Awesome. Yeah. Silver's on the move today, so that could be the second mover. Bitcoin might be the third mover.
Yes.
Well, thanks so much for coming on. We'll have to have you on back. As always, no financial advice on here, just providing entertainment and access to some of the Treasury company CEOs. So, Matt, really appreciate it, and have a great weekend.
Awesome.
Yeah,
Thanks, guys.
the answers, Matt.
Yeah. Thank you, Matt.
See ya.
Amazing.
I think George is on. There we go.
Yeah, we got George. Can you hear us?
Hey, yeah, can you guys hear me?
Yeah, we can hear you. Well,
Excellent.
George Mekhail, managing director at Bitcoin Magazine, head of Bitcoin for Corporations. We've actually seen Strive's team speak at some of the Bitcoin for Corporations events in Bitcoin Asia, as well as like Strategy World. So thought you'd be an amazing guy to follow up on the same stream with Matt Cole and with the exciting M&A activity happening with Semler Scientific being bought by Strive. Want to get your take on that, and certainly get your take on how the community's feeling, how the Bitcoin for Corporations team, what you're seeing. Will we expect more M&A? So let's maybe just dive in. And how are you doing this morning or this afternoon?
I'm feeling good. Yeah. Happy Friday. Thanks so much for having me on. Very exciting news. I would say a little bit surprising news. I did not see that one coming, but definitely do expect more M&As to happen in this space. They might look a little bit different than this one. I think this one was unique on a lot of different levels, and I think the Strive team is probably going to be one of the leaders in more of these acquisitions. But sentiment overall in the markets is not great.
Yeah.
I'm sure you've noticed that, but I'm kind of trying to say what Matt said, zoom out a little bit. I think we know that September has historically been the worst month for Bitcoin ever since we started measuring that, and October has been historically the best month. So we're literally in that time period where it's like it's going to be dark for another week, I think. And I'm not saying like a flip is going to be switched when October hits, but I do think it's important just to kind of to zoom out. I mean, we're at 110K. That's it's crazy to compare that to what it feels like if you just kind of scroll Twitter. But yeah, there's definitely some unique dynamics this cycle that are exciting. That we've had the privilege of being sort of at the forefront on with Bitcoin for Corporations, and I would say that sentiment within the executives of these companies is still very bullish. It's again similar to what Matt said. Everyone's taking a long view on this. They're Bitcoiners at heart, and they understand that the name of the game right now is accumulation. This is the digital gold rush, and they have their eye on the prize. They're not necessarily focused on stock price, though. Of course, they want to see their stock. Everyone wants to see their stock go up. There's only so much you can do about that. But if you keep your head down and you focus on the fundamentals and you focus on stacking as much Bitcoin as possible, you're going to come out ahead. And I think that's the thesis of every Bitcoiner, and it makes sense that logic carries forward to corporate leaders.
How do you think? Because I've had a podcast previously on equities, and I think that's obviously treasury companies are great because it's kind of this bridge now between Wall Street, Bitcoin, people's 401ks and IRAs. Right, you can just press a button and buy IBIT or any of these treasury companies. What have your communications been with? I don't know if you're talking with a lot of the folks on the street, and some of these institutions that you're talking to. Like, what's their general feeling? Is the smart money still excited about this? Clearly, we're seeing this pullback, to say the least, with a lot of these treasury companies. So, from the Wall Street side, if you're having this conversation, like, what's that sentiment like? Is it a lot like Matt said, where people are zooming out? Would love your take.
Yeah, definitely. I think that the sentiment on sort of Main Street, so to speak, the retail sentiment can be contagious, and it can be kind of disheartening. But I don't think that people who are looking at this and they're building companies around it, they're building actual long-term businesses and strategies around it. I don't think they're impacted by it. They may be slow, like a little bit less aggressive in terms of making decisions around spending marketing dollars or hiring or things like that. But in the longer view, they're still very bullish and very much motivated. I think it kind of one thing people I think have to keep in mind is that not every pure play treasury company is going to make it. I think it's naive to think that every company will make it. I think this is a kind of a trend that's happening, and a lot of people probably assume that it's easier to execute on this strategy than it actually is in reality. And so I don't think every company is going to make it. I do think there are kind of warning signs to pay attention to when a company just announces, oh, we're going to add Bitcoin to our balance sheet. Like, that's not an automatic, trust thing for people to get excited about, or it doesn't automatically mean your stock is going to skyrocket. And it definitely doesn't mean that you know anything about Bitcoin. And I think that's one of the key things to look for is the companies that have leaders, that have executives who actually understand Bitcoin and have a level of conviction that they understand the cycles. They understand that this is a long-term play. They understand that this is a digital gold rush, and that if you zoom out and look at kind of the buying patterns, they understand that corporations are buying more Bitcoin than is being mined. Right? That's not sustainable at these price levels if that continues, and it looks like it's going to continue. So I think it's important to look at what people are doing more than what they're saying. Just like general wisdom that is very applicable here is like, what are they actually doing with their resources? What are the kind of financial instruments they're leveraging? Who are their partners? Who are they hiring? Who's their team? What does their team actually know about Bitcoin? And what's the level of conviction, especially of the CEO? If the CEO is not like fully committed to this, jumping in with both feet, and really following, in Saylor's footsteps in the way that we've seen Simon Yarovich execute, we've seen Andrew Webley, we've seen some of these guys who are really seeing a lot of success. I think you have to really pay attention to what's happening beneath the surface more than just kind of like the headlines.
That's really helpful. One thing that is kind of curious, you said not all these companies are going to make it, and I guess I'd be curious if you're ever talking with some companies out there who are thinking about getting into this, and if you ever advise them not to start their Bitcoin treasury strategy, at least now or ever, for some of those reasons that you mentioned, right? Like if you don't have full buy-in from the CEO, for me, that's one of the hallmarks of a successful Bitcoin treasury company. You have a couple of examples where that may not be sort of the case, but like I think about like Capital B, where Alexander is not the CEO, he's the deputy CEO, but he's out there, right? The conviction, you're going to be hard pressed to find somebody different. But if you look at SmarterWeb, you look at Metaplanet, as you mentioned, if you look at DDC, for example, if you look at H100, you've got that founder led. So when conversations are not like they are with those individuals, have you ever told anybody this is not the right time or you shouldn't be doing this?
I don't really think it's necessarily our place to say whether or not a company should do it. I think by the time they sort of are talking to us, they're already pretty committed. They see us as a way to kind of support the decision that they've already made. So we're not having those conversations necessarily. We have had conversations, in passing, let's say at conferences where somebody's maybe thinking about it and they want our advice or whatever, and kind of more informal, like how should I think about this? And there's like some really unique companies, I would say, that are, maybe less on the pure play side and more have an established business, and they're thinking about adding Bitcoin to the balance sheet, and they're wondering how they should execute. And those can be really interesting conversations where, we can kind of lay out a roadmap that makes sense and that could be successful for them. But, I think when it comes to the pure plays, it's a lot of them have just kind of been ninja launched, and it's just like you hear about them, one day out of nowhere, and you're like, what is this company? Where are they going? Is this legit? Is this for real? I've never heard of this guy. And I think it kind of points to one of the reasons I'm passionate about Bitcoin for corporations and what we're building. We have a network now of 38 companies, mostly Bitcoin treasury companies, not all pure play treasury companies. Some of them are just Bitcoin companies that have Bitcoin on their balance sheet, and they're committed to building a great product and generating revenue, and using their excess reserves and excess revenues to just stack as much Bitcoin as possible. What I love about the sort of community side of it, so to speak, is getting these guys together in the same room at least 4 times a year, sometimes more, and getting them to kind of know each other more and be aware of each other creates a level of accountability. I think when it's harder to be a scammer when you have to show up in these rooms and face these people in real life. And it does. I think it is needle moving in a sense on that like accountability front and on that conviction front, and helping each other. I mean, the whole genesis of Bitcoin for Corporations was a partnership with Strategy, MicroStrategy at the time, and it's kind of counterintuitive that MicroStrategy would want to open up their playbook and want people to copy it and want to see, quote unquote competitors, or at least they would be considered competitors in almost every other industry. But, obviously they recognize that the more companies that do this, the more it legitimizes what they're doing, the more it creates buy pressure. And so I love that dynamic that these companies aren't really in competition with one another, but there are a lot of things that they can be doing to help one another, exchanging, best practices. And even, we're getting into a place where we have a level of critical mass where we can really be an advocacy group where these these executives can kind of speak collectively and start influencing things like policy. And so I think that's really going to be the next iteration. So kind of a sneak peek into the roadmap of what we're looking at. But yeah, that's kind of how I describe our work and kind of where we're most effective.
Yeah. And George, do you
go ahead.
I was going to say, talking about getting them in the same room. I saw earlier on Pierre Richard's show with Jeff Walton, VP of Bitcoin Strategy at Strive, and as well as Matt Cole, is that the Bitcoin Treasury's unconference in New York with Tim Kotzman, Ed Julien, was some of that alchemy had happened through, that event. Is this something you guys are looking to do more of? And second part of that question is, we were at Strategy World. We saw where Semler, when we were interviewing or Eric Semler was talking about, hey, Saylor gave me a lot of his free time to be able to discuss this. You guys are essentially scaling Saylor in a way. Are you guys kind of getting into some of these products that if Michael Saylor's going in and hammering ChatGPT 5 on launching, Stride, Strike, Strive, all these prefs and these preferred instruments, is that something, a playbook where you're like, hey guys, here's the new playbook. Don't do converts to start out. Get to, preferred stock as soon as possible. This is the new thing. Do you have those types of conversations with these companies?
Yeah, definitely. So first of all, I think I didn't get a chance to go to New York, but it looked like the event, the unconference was incredible. I definitely had FOMO. So shout out to Tim and Ed for throwing a great event. We're definitely looking at doing more of those. So, we did a Bitcoin for Corporations symposium in Vegas. We did one in Hong Kong. We're looking to do one in Abu Dhabi in December, and then DC in Q1 is kind of the next one on the roadmap. But yeah, we're committed to doing four events a year, and then likely in 2026 we'll do probably 6 or 7, and certainly trying to get out there as much as possible. Looking to partner with Tim and Ed whenever we can, and just kind of cheer each other on. There's plenty of work to do in the space. We're talking about a movement really that's just getting started, and so it's exciting to be a part of it. As far as getting into more kind of the financial instruments, we're definitely having more of those conversations and trying to help. I think this is part of the work, is as new companies are looking to adopt this strategy, it's learning from what Saylor has learned, learning from what others have learned, so that they don't kind of go down those roads and they can just kind of have a shortcut to here's what actually works. And I think that Stretch is a very exciting product. I think that if more people kind of understood what was taking place there, they would really see part of the vision of Saylor and his team. And that is really the fact that they're creating a better bank. They're creating a better way to invest and to have your money held in more dependable instruments than traditional banks. It's really, really an underrated aspect of what's happening right now. Part of it is advertising rules around you can't promote a security, so they can't go out and tell you directly that you should put your money in Stretch. They have to kind of approach it in a way that's kind of a little bit more tactical based on those rules. But the reality is, putting your money in Stretch is better than putting your money in a money market account. Not financial advice. Got to put that disclaimer out there. But why would you not want to earn 10% instead of 1% or 2% or whatever it is? And so, from a just down to first principles, looking at what Bitcoin is trying to do, we're trying to make the world better, right? Fix the money, fix the world. And a lot of Saylor has his fair share of critics and haters, but you look at something like this and you're like, oh man, they're actually doing that. They're actually making practical things that make the world and the economy a little bit better. Same thing, Metaplanet in Japan, they are almost single-handedly improving the economy in Japan with some of these preferred instruments. And so I think when people start understanding that vision a little bit more and they start seeing that reality taking place, it becomes less about, what's the short-term stock price action, and it becomes more about the fact that they're building a infrastructure and a machine that is going to really create a better economy. So that's massive and underrated. So
not sure if you intentionally kind of said something that's been in my head for a while, but kind of the quiet part out loud with becoming a bank. So do you see some of these treasury companies? That's where I personally see it just evolving into. I know Saylor at some point had said he wasn't intentionally or going to be going that route, but it seems inevitable at some point they're going to start lending, right? And they're going to create new instruments and become in a huge institution that's a bank. What's your personal opinion on not necessarily strategy, but do you see this happening with some of the bigger players in the treasury space?
Yeah, I mean, short answer, yes. I think that's definitely what's happening. We earlier this morning, I'm not sure if you guys saw, we teased a trailer of a new interview that I had an opportunity to do with Semler at his home. That's dropping. The full interview is dropping next week. But we talked about this specifically, and I don't want to spoil it, but I think that I think he offered some insights that I don't think I've heard him share before. So definitely, peep that next week. I think it'll be interesting. But yeah, I mean, I think it's you just look at Stretch alone, and you just compare that to the the banking system right now, and you're like, oh, that's a better banking product, like hands down. And so I think that's there. It is. Yep, there's the preview.
It's a really nice house. I mean, I'm not surprised, but also
Yeah,
the
exactly.
yacht too is a nice touch.
It's ridiculous. This house was
Why
amazing.
are we doing these kind of interviews?
That was a lot of fun.
I guess you gotta found Bitcoin for corporations, and you have to host 4 conferences first. So
We'll come though, Taylor, if you're listening. Sorry, we didn't mean to cut you off. Go ahead, George.
Yeah. No, it's all good. Yeah, so I think that is what's happening. I think it's going to be interesting to see how many of these companies can actually pull this off. The way I kind of look at it is there's going to be one clear winner in every region, in every market. There's going to be one strategy. There's going to be one meta planet that's going to gain enough escape velocity in their market to where it's like they'll probably be untouchable. That's kind of my thesis right now. And then there's going to be copycats that are going to have a lot of success, and they're going to do some unique things, and they're going to look very different than strategy. You look at Strive, you look at Nakamoto. They have a very different approach to how they're executing, and they're not really necessarily aspiring to be the same type of company that strategy is. And so when it comes to are these companies becoming banks, I think the answer is yes for some of them, but definitely not all of them. And then you go further down the line. So that's kind of describing the possible outcomes of the so-called pure play treasury companies. The second category is the companies that, again, just have Bitcoin on their balance sheet. They're creating a great product. They're profitable, and they're using Bitcoin as a treasury reserve asset just because it's wise to do that, right? It's better to hold your money in Bitcoin than it is in cash. And I think you're going to see a lot more of those, the folds of the world emerge. And then the third category is companies that, again, have a good operating business. They're making money, and they have nothing to do with Bitcoin, but they're putting Bitcoin on their balance sheet. And I think a great example of that is Figma. Came out of nowhere. They're a private company. And all of a sudden, it's like, oh, wow, we have a bunch of Bitcoin on our balance sheet. And so that, to me, is one of the most exciting trends, because talking to these non-endemic companies that just like are like, yeah, of course, we're just going to put Bitcoin on our balance sheet, but like we're not obsessed with Bitcoin day to day like you freaks. Like we're actually we're building a design, amazing design software, right? And so that's where real adoption, I think, happens, and that's kind of what we are passionate about pressing on. Is like, how do we get Bitcoin to the masses? Because look, our mission is to accelerate corporate Bitcoin adoption, and the reason that is important is because as a Bitcoiner, I want to see Bitcoin adopted, as quickly as possible. I want to see hyper Bitcoinization in my lifetime. I'm not trying to sit around and wait for it to happen after I die. Like, I think there's a level of urgency to see as many different sectors, as many different industries, many different pockets of the economy adopt Bitcoin. And to me, corporate adoption has always been inevitable, in the same way that I think nation state adoption is inevitable. And I know there's a lot of saltiness about corporate adoption and suit coiners and whatever else, but the reality is, like, what did we expect? That that corporations were going to sit on the sidelines and let this opportunity pass them by? Like, again, this is always inevitable, and so I'm here for it, and I'm here to watch it continue to accelerate.
And shape it ultimately. Brian, you jump in.
No, it's interesting, especially the banking comment. One of the things that occurred to me as you were talking is that it might actually be a company outside the U.S. that does it first, right? I have a bet on a company that wants to do things in Bitcoin with their Bitcoin treasuries and things like that, that company could be like a bank. And, based on some of the things that some of their founders have been involved in, that would make sense. But I don't know if that's the primary thing. It's also a lot less necessary, I think, in the US than it is in a lot of other countries. So, you have events in Abu Dhabi. We met briefly in Hong Kong. And I know we've got events in the US. So I'm curious for you, George, as you're talking to companies that are not publicly traded in the US, that are publicly traded in other markets or thinking about IPOing in other markets, how are those conversations different? Are there any specific markets that are really super exciting? And in what ways is that, right? Like, and you can even say, Japan, Metaplanet's super exciting, but there's also other treasury companies in Japan. So I'm really curious what you hear behind the scenes and where that goes.
Yeah, so to a certain extent, I think I'm excited about every public market, and obviously there's the ones that get the most excited about are the biggest ones that get the most attention. U.S., Japan, Saudi Arabia is one that's really interesting. I think it's the 8th largest public market in the world. I think it's all about level setting expectations. So if you go into it with the mindset that this is a strategy that is going to pump your stock, so you should do it, you're bound to be kind of disappointed in some cases, because that's really not what we're trying to do here. Yes, we want to see stocks go up, but at the end of the day, like, the stock should go up once the market understands what you're doing with it. And so if you go into a market that's much smaller, that's less talked about, we're in conversation. I mean, our membership base right now represents 14 different public markets, and so. Brazil is another one. A lot of people don't talk about. There's 2 very exciting companies executing the strategy in Brazil. And so again, on a long enough time horizon and with the right expectations set, these companies adding Bitcoin to their balance sheet essentially are being repriced in Bitcoin terms. And so as Bitcoiners, I think that's what we want to see. I think that's part of the mission here, is like, that's how we get to a Bitcoin standard. And so we tend to overcomplicate it because, we're looking at MNAV and Bitcoin per share and all that kind of stuff. And we obsess over these metrics. And, if you're like a trader and that's what you're trying to do, then great. Like, you should obsess over those metrics. But most people aren't good at trading. Like, that's just the reality. And if you don't know what you're doing, like, you're probably going to get wrecked. And so I don't think buying these public stocks is necessarily for everyone. But if you go into it with the right mindset and the right expectations, and you believe in a company, because look, let's peel it all back. If you think about the stock market in general, it's always been something that's been confusing to me. Of like, okay, why would I buy like shares of a company? Well, the reason you do that is because you believe in the company, you believe in their mission, their product, you believe in their leadership, you believe in their ability to execute. And in theory, if you buy their stock and they do the things that you expect them to do, their stock is going to go up. Well, what we've seen in recent years is that correlation doesn't really always happen, right? The stock market has kind of become a little bit of a joke. Like, we've seen like the meme stock cycles and things that don't necessarily correlate with real world activity. What's happening in the real world, in theory, should dictate what the stock does. And so I think moving to a Bitcoin standard and having companies, add Bitcoin to their balance sheet is going to bring that correlation back in line to where we can go back again to first principles. Like, buy the stock if you believe in the stock, if you believe in the company, if you believe in the execution, and not to make a quick buck. Like, stop, and again, unless you're a day trader, which is a very, very small percent of the population, and it's become more of a percent of the population thanks to kind of the rise of like, gambling and memes and shit coins and all this stuff. Like, that's I think people's expectations have really become kind of off kilter, and so we just gotta like bring it back down to earth a little bit and recognize what's going on here. And so when you apply that logic to smaller markets, then you're really looking at, again, the fundamentals of a company in sub-Saharan Africa, adopting a Bitcoin treasury strategy is going to grow a lot slower than Metaplanet or our strategy. They're going to be able to accumulate Bitcoin a lot slower. They're going to be able to raise a lot less capital, but fundamentally, they're still transforming their company. They're still transforming in a slower, maybe smaller scale, their local economy. And to me, that's what's exciting. It's like, let's get back to the basics of fix the money, fix the world, and apply this logic and apply this playbook to every market.
It's really interesting. Just kind of what occurred to me out of what you said was people don't really need corporate Bitcoin treasury companies, but every company needs Bitcoin on their balance sheet in the end. And I don't think I quite thought about it that way. Everybody needs Bitcoin. I think we all believe in that. But it's just really interesting to sort of think about it from that perspective of like, there's no company that wouldn't benefit from doing what we're talking about here. So that's really cool.
Well said.
You cool with taking a question from the audience that just popped up?
Oh, sure.
So Big Ryan saying, given the potential persistence of Bitcoin's 4-year cycle, debatable, in parentheses, and potential looming risk of classic downturn, how can Bitcoin treasury companies urgently implement robust risk management, sustainable cash flow, strong governance, and diversified liquidity buffers to prevent catastrophic losses and ensure long-term resilience?
Yeah, I think it's a great question. I think it's a question that every company should be thinking about. And again, this goes back to just the fact that not every company, in my view, is necessarily going to make it. You can't just make an announcement that you're going to adopt a corporate treasury strategy and expect that to be it. You have to have a good team around you that understands capital markets, that understands how to mitigate risk, that isn't getting too greedy and looking at, just moving as quickly as possible, raising as much debt as possible, and getting overstretched. And so I think this really just comes back to what I said earlier, which is just having the right people on the team who understand all these factors and who understand the fact that there are cycles, and we should prepare for cycles. I'm of the mindset. I'm one of those kind of perma bulls, excuse me, who thinks this time is different. Who's looking at the rate at which public companies are buying Bitcoin compared to the amount of Bitcoin that's being mined, and I think that's a really important metric to pay attention to. But I don't think it's something to bank on. I don't think it's something to build a strategy around. I think this approach requires a level of being conservative and being thoughtful about how much capital you're raising and how much capital you're deploying and keeping on hand, and being thoughtful about how you execute. So I think how they should be thinking about it is how they're primarily how they're hiring and the team that they're building. I think is the long answer there.
I got a one quick follow up too. Sorry, Jody. Just because it's on the same piece. So do you feel like, I'm not asking you to name some of the companies, but like, let's say Fortune 500 companies have reached out to you. How much are these companies thinking about the potential 4-year cycle? And from a macro perspective, my personal belief is that it's going to, we're not going to see the 80% drawdowns, but would love your take, just because now with the ETFs, this is very different this cycle. We have all these institutions coming in. I wrote a tweet saying I felt happier buying Bitcoin at 120 than I did at 2,400 when I first bought it, because it feels much more that it's not going to go to zero, obviously, anymore, right? But it just feels a lot safer. I'm going to probably eat my words at some point, but would love your take here on one. Do you feel like the cycles are going to be different now with all the changes that have happened in the past 2 years? And then two, if you have talked to Fortune 500 or companies that have not publicly talked about getting into Bitcoin, are they potentially waiting for the cycle so they can buy at a lower price?
So yeah, I think I'm in that same camp where I don't think we're going to see as big of a drawdown as we have in the past, but I do think that we'll see a level of a pullback. And yeah, the companies that we're talking to, especially the ones who are not endemic, the ones who are not Bitcoin native, are obviously going to be more cautious and more kind of careful with jumping in with both feet and kind of paying attention to the cycles and where we are in the cycle and trying to understand that. And I think they have a mindset of wanting to buy low, but the reality is most people, in terms of when the rubber meets the road, they FOMO in when the price goes up. So it's like these companies talk a pretty big game sometimes about like, I'm going to wait for the dip, and then once it hits that price, that's when I'm going to jump in. But then the dip comes and it's like there's you're a human being and you're like, oh shit, it's going to keep going down. Maybe I should wait. And then you end up FOMOing in when it goes up. So it's like corporations are no different than people, because they are made up of people. And so it tends to be kind of the same approach and the same kind of, thinking that you're gonna do something when in reality your emotions end up getting the best. So that's why like trying to time the market just doesn't work. You have to have conviction first, and you have to understand what's going on, what the underlying asset actually is, and pulling the trigger when you're ready to pull the trigger, not when you think the price is bottomed.
Yeah. George, you've written 2 books. I Am Not Your Bra. I think 3 books maybe you've been involved with.
2.
I'm Not Your
there's
Bra.
2.
Okay.
Yeah.
And then Thank God for Bitcoin.
Yeah.
And you know, for 21 Rates, our website, we focus on Bitcoin personal finance. We want people to make better decisions with their stack. So what is, without being financial advice, what is one like Bitcoin finance tip from George? And especially because I think it's very interesting where you are, if you're like, hey, I'm like moving Bitcoin from cold storage into interactive brokers or Robinhood to go buy this thing. And you're like, whoa. Like, that's not why we're in Bitcoin. Like, you need to have, you know, self-sovereignty. You need to like control money. You need to be able to walk across the border in case there's a huge government crackdown. So seeing from that lens of your, you know, taking these core Bitcoin principles and then you're introducing corporations and people are buying these using traditional stock platforms, what's maybe a take that you have or a recommendation for some of our followers to be like, look, here's what you need to be thinking about. Go back to first principles. I'll let you take it from there.
Yeah, I mean, it's very simple. I don't think my answer is going to surprise you. It really is just buy Bitcoin and hold it, and understand what the more you understand it, the more you'll have conviction and you'll want to allocate more. You know, think long term. Don't try to time the market. Set aside money from every paycheck. I think automatically buying from every paycheck is the best way to buy Bitcoin. It's often the cheapest way to buy Bitcoin too. I mean, companies like Fold, Cash App, like they let you buy with reduced fees if you do automatic direct deposit and you allocate part of that to buying Bitcoin. And then once you get to a certain level, transfer that to cold storage and, you know, don't think about it. And then the other thing, you know, because you brought up my book, is if you have kids, like, teach your kids about Bitcoin, bring them to conferences, bring them to Bitcoin meetups, like expose them to the community. And, you know, we need to be thinking about the next generation. As much as I said, I want to see hyper Bitcoinization in my lifetime. I'm pretty aware of the fact that, you know, the next generation is going to be the one that's going to be like stewarding it in the most real way. And so if we're not training up the next generation to understand this asset, thinking about things like, as much as people hate thinking about what happens when they die, but thinking about what is your plan for your estate when you pass? Are your heirs ready to receive your keys? Do they even know what your keys are, right? So a lot of people aren't thinking about getting their families involved. A lot of us just it's a solo mission. And so I wrote I'm Not Your Bra, 21 Keys to Sound Parenting, because that's a passion of mine. And it was written with Bitcoiners in mind. You know, as we mature as an industry, I think there's more and more Bitcoiners are having kids, and so I want us to be thinking about how we're training up the next generation. So, I guess the other thing is, like, know what you're doing if you're going to be looking at these stocks. And, you know, I don't want to give financial advice, but like I think that we have this illness right now as a society where it's like the money is so broken, everything is so expensive, and we're looking for a shortcut to, you know, make a quick buck. And on the surface, some of these treasury companies can look like those opportunities, and so we use money that we don't have. We get overstretched. The stock goes down, and now you're on Twitter complaining of like, why is your stock 50% down? You got me wrecked. And really, like, you know, why are you using money you don't have to buy a stock? Is kind of like my response in most cases, because if it's not money you can't lose, then just chill. Like, wait, it's going to be fine. You're going to be okay in most cases, unless you didn't do your homework and you kind of got suckered into a headline of a company that doesn't exist anymore. And that has been the case. And it's like, you got to be careful. Like, you got to know what you're doing. That's why most people should just buy Bitcoin. Like 80% of retail should just buy Bitcoin and hold it. So, and then the last thing I'll say is I'm pretty bullish on Stretch in general, just because I think that that's a very, very innovative and kind of new dynamic that's emerging that I think is going to represent part of what the new kind of financial system is going to look like. And so if you're someone who's like more of like a conservative, moderate risk taker, and you don't want to be like 98% allocated to Bitcoin, you want to have some liquid cash kind of still available to you, but you want to earn some yield on it in a way that's fairly reliable, then you should really look at Stretch.
One follow-up question, I guess, to parts you mentioned a little bit earlier with introducing your family, introducing your kids to Bitcoin. We caught you at Bitcoin Hong Kong with your son, and I'm curious, what kind of takeaways he's had from any of the events he's attended with you that you feel comfortable saying on his behalf. I don't want you to speak for your son or anything like that, but what are the kinds of things that he's saying, and what are the kinds of things you're feeling as a dad having brought him to those events?
Yeah, definitely. So we homeschooled our kids. I have two kids, 17 and 15. My son, who you met, Kingston, has been, alongside me for the last 4 years. I've started bringing him to conferences since Bitcoin 2022, and he's kind of jumped in with both feet and gotten involved and made himself useful. He's also been a co-organizer at the meetup that I co-lead here in Arizona. And I think the biggest takeaway is just that he loves being around Bitcoiners. And there's something I'm passionate about is getting Bitcoiners together in real life. And I think if you're not regularly sort of meeting up with Bitcoiners, if you're not going to conferences, if you're not going to meetups, you're missing a lot of what's going on here. And so that's something I was very intentional to expose my son to at a pretty early age. And I think it's piqued his curiosity to the point where he's now graduated from high school a year early, and his passion was getting a job in the Bitcoin space. And so he built a lot of relationships at BTC Inc. and he actually just got hired this last week. So he just started in a customer service role. So super proud of him and excited kind of for his future. But I think he's a good role model for Gen Z and kind of what it looks like to be intentional and make yourself useful and create value and build relationships and surround yourself with the kind of people that you want to be like, right? That's ultimately what I think is important about getting together with Bitcoiners in real life. You start realizing that you're not a freak, you're not crazy. There's a lot of us. We're just, you gotta be intentional to find us. And once you surround yourself with more Bitcoiners, I think it makes you more bullish. So,
Yeah. I'll say I brought my 2-year-old to our Ben Bitcoin meetup, and halfway through he was watching Miss Rachel. So I need to read your book and be a better parent.
We got to get Miss Rachel stacking stats.
Yeah,
Right.
or we orange pill Miss Rachel, which would be very influential to the next generation.
We should definitely do that. We should work on that. All right. New side quest. Let's do it.
Yeah.
There it is. Well, George, thanks so much for coming on, man. This was really fun. This is actually our first time doing the live Treasury Talks. So,
nice. Right on.
yeah, congrats there. And you're not just talking about it. We did meet your son too in Hong Kong. So he truly does bring them everywhere. So that's awesome. And you're just doing God's work here in the Bitcoin space. So I appreciate it. And we'll have to bring you back sometime.
Yeah. Thanks so much for having me on, guys. Really enjoyed the conversation.
Yeah. Thank you, George.
Have a good weekend.
Have a great weekend.
Have a good weekend.
Go.